let's chat about this for a second. So, just a quick introduction for everybody that's watching here. I'm recording this, by the way. Um, Andre is the developer of this fantastic software, Edgeful dashboard. You see me reference this on the regular with my live sessions, my poll report. Anytime I'm doing equities on demand, we're looking at this as well. And the go-to information that I like to see: gap fills. I'm looking at average trading ranges. I'm looking at previous days high and low and close. I've intentionally built my workspaces on TradingView also with this information, where these are Edgeful indicators. So Andre is the expert. I mean, every time that I've met with him, he's wowed me with more and more stuff that is very, very useful into my day-to-day trading. This helps me craft my trade for directional bias, whether I'm bullish or bearish, whether I need to trade a directional day or not, whether I should just be trading options, credit spreads, butterflies, some of the stuff that I do in options trading. So it's really nice to have something like this at a glance right here. And also, when I posted that video on my YouTube channel, that was right here, and I shared that with Andre, shared that with you and your team.
Yeah.
That would be somewhere in, I think it's like how I trade. Let me see if I can find it here. So how I trade, see if that pops up in here. There it is. So this how I trade tools and resources, I spent about 30 minutes of that video talking about Edgeful. So
Yeah.
that's a good way to also see a bit of a showcase. You want more information, but the man, the myth, Andre is here to talk about it in person. So let me go ahead and admit Doug here. All right, Andre, if you want, you're more than welcome to share your screen, or if you want to help me walk through a couple of things. I did have some questions on some of the reports that you and I talked about.
Perfect.
Um, any updates on some of the like previous weekly high-low closes or the previous week's high-low close?
So what we've been focusing on recently, and just to hello everyone, I'm the CEO. I know that it was a great intro by Chris, so appreciate it. I'm the CEO and founder of Edgeful. Um, but regarding those reports, what we've been focusing on right now is completely revamping the back end so that we can allow complete customization of the front end from the user. So what we've been doing is pretty much we've restructured the entire database, and then now what we're going to release very soon is multiple plans that allow where like the higher plans will allow you to customize how you like to look at your reports. Um, from like for example, we use ATR and we use the 14-day ATR, but
Right.
some people like to use the 7 or some people like to use the 5, and like in that case, you'll be able to go in and customize. Okay, this is how I want to consider this. Um, how and I mean, and for those who trade futures, which I doubt many of you do here, but customizing your session times, like adding in your custom sessions, being able to actually customize this dashboard that you're looking at right now.
Mm-hmm.
So being able to select, okay, this is my strategy one, and then my strategy one is made up of X amount of reports, and then you'll be able to say, okay, this is my strategy. So you'll have strategy 2, 3, 4, and these are going to be like templated report dashboards. Also being able to favorite certain reports. And I know this last one, I think, Chris, you'll enjoy the most, is if you want to just switch that gap fill report,
Yeah.
price action right there.
Yep.
We're actually going to be including a table that shows you, like sorted by date, every instance. So hypothetically, January 5th was a gap up and that gap filled. So you'll be able to sort and filter in a table for every result that is like within this report, and then you'll be able to click into a certain result and then see it on a chart. So see it within a TradingView chart right inside of Edgeful.
Nice.
Yeah, so that's what we've been focusing on recently. We've kind of put some of the reports a little bit more on pause just so we can build that out,
Okay.
because the customization has been a huge request by people.
Okay.
And then eventually, very, very long term, is we want you to be able to actually build your own reports.
Right.
So like pick and
Yeah.
choose certain things where you want to say, okay, I want to look at previous week's high or previous week's close. How often do we touch it, etc.
Very nice. For everyone watching too, Andre, do you mind talking them through? I know that this is also right now part of the package. This might change with some of the other plans you guys are rolling
Yes,
out, but I wanted to go through some of the indicators that you and
of
I
course.
talked about last time. And I have been using the gap fill one. I'm good with because I use that on the Edgeful dashboard. But the
Yeah,
opening bell range, this 9:30 to 10:30, has been pretty much a money indicator for me as far as taking breaks out directional plays for the days, especially Tuesdays, like mostly Wednesday, Thursday, Fridays. I'm looking for those directional days, especially. So if I go into indicators here, And I've got the invite only from Edgeful. Do you mind just giving a quick overview of all these for everybody?
Yeah. And we actually are releasing a lot more, just so you know.
Okay.
But ideally, what we're going to do, we're having them very soon. We have a bunch, as you can see right now, but
Mm-hmm.
we're going to have an indicator attached to every report within Edgeful. So
Okay.
currently, we don't have for everything. As you can see, we have close to, or I think over 50 reports now. We don't have that many indicators. This is something that we're building out. So in this case, the gap fill and gap fill by close, green and red streaks, these are all things. So if you want to just click on green and red streaks, for example,
Sure. Okay.
can you go to the daily time frame?
Of course.
And it's pretty small right now, but if you see,
I
if
can
you
see it.
zoom
Yeah.
in, you can see that the little arrows below the candles will tell you whether it's a green or red day. So that corresponds with our green and red streaks. So you can see that there's 3 consecutive green little arrows in the last 3 days.
Right.
Today is a red day, so that broke the streak, which, I mean, we can just look right now. I can do it on my end. Well, if you want to switch back to Edgeful and go to that green and red streaks report, I'll just show you how to use this.
Sure. So we're
And
going
just,
into it's is it
within
an
the price
indicator?
action.
Price
So just,
action. Okay.
yep. And then I think it's the third or fourth, the third one down.
There it is.
So you can see that, I mean, this is year to date. Even if you look at the trailing 1 year,
I'll go to
yeah,
a
I mean,
month. Yeah.
even in this case, if you want to go to, so this is the last month, you can see that the average consecutive green days is 2.
Right.
So in this case, we had 3. And then if you want to switch that to the 1 year, and let's see what that result is. So this is in the trailing 1 year. You can see that the average consecutive green days is just over 2 days.
Right.
So that third day, you should expect that fourth day or at some point a red day to come.
Very nice.
So you can see once you go back to that trading view now, you can
One,
see
two,
that on
three.
average, you're not going to get that many consecutive days. So if you're a swing trader,
Mm-hmm.
you want to make sure that you're maximizing your profits by taking profits or taking the majority of your profits around that second day, because historically that third or fourth day is going to be red.
Do you happen to have so I guess this is what happens when we talk as well. Do you have an instance of percentage movements or point movements? I would say percentage movements just based on those averages as well, because having 3 candles on average, or what was the dashboard average? Having 2.28 days on average over the last year. Let's go a little bit more history here. 2.12. So really, if you get 2 up days, um, I mean, that third day, fourth day, you're looking to take some profit or protect some profit, but also
So if you scroll right
there's your
there,
performance. Yeah, yeah, perfect.
there is that performance. So
Yep.
just to kind of clarify how this works, the that bar that you're hovering over, the 1.84,
Mm-hmm.
that is the performance, the average performance of the streak. And then that negative 0.81 is the performance on average of the day that breaks the streak.
Interesting. So it's showing that you have basically like a 1.8% move up, and it cuts that in half.
Correct.
Almost. Yeah. Okay.
Almost. Yeah.
Okay.
So it kind of sets the understanding of, I mean, in the last 5 years, obviously being long bias has been working
For sure.
fantastically,
Yeah. Yeah. For sure.
especially as a swing trader. But you want to make sure that, yeah, you can just
I
switch
was gonna
to,
say let's incorporate some 2022 in here because that would at least give us some bearishness.
yeah,
So now you have a 1.72, which reduces the size of the upswing. Go
yeah,
up, average of 2 days, and then that third day or that breaking streak would be a 0.75. So you're up
exactly.
1%, and pretty much hold up 1.72, back down to 1%, and then we'll see if we're going up again. And
Yeah.
and this max is like the largest
The
sample size
single
of the
largest
last
consecutive
3
streak.
years, right?
Correct. Yeah, the
Yeah,
single largest consecutive streak.
got it.
So, and then like, does that answer that question about that specific indicator?
Yeah, to me it does. Anybody else has questions? I'm looking at the chat so I can read those off. If anybody has any
Perfect.
questions, yeah.
Um, in addition to that, I mean, just to go to some of the other ones, to the other indicators,
Yep, let's go indicators
um,
here. So if I I'll get rid of the
can you
streaks.
actually remind me of your TradingView username?
Yeah, it's Chris Pulver with no space.
Okay, 1 second.
Okay.
Okay. We've released a couple more, and we just getting you. If you can just refresh, let's see what happens.
Yep.
And now open up that indicators thing again.
Yep. Oh
There you go.
boy, look at that. Look at that.
So,
That's a lot more. Nice.
yes.
Okay.
So we have released a lot more, and you can see. So, like for example, the high and low close by weekday. If you click on that one right below the one your mouse is on,
This one here.
click on that one,
Okay.
and then if you want to switch over to like a 1 hour,
Mm-hmm.
or maybe even a 15-minute is fine.
Okay.
But what this, yeah, that 15-minute is fine. So, and then can you actually go to a SPY just because of
Sure. Yeah.
the sessions?
Yep.
Or actually, sorry, I was looking at you can go back to NDX, but can you hide the orb one?
Oh yeah, I'll make that disappear. Okay.
Yeah, perfect.
Yeah, we'll use a spy. That's fine.
No, okay. Well, either way, it doesn't matter. I
Okay.
was getting confused because of the orb one was overlapping.
Yeah.
Um, but what this one shows, each box highlights the week. So you can see that there's a green box that your mouse is on right now.
Yep.
The range of the box, the width of the box covers that week. The high and the low of the box covers the high and the low of the week, the highest high and the lowest low. And then that green line is the highest close, and the red line is the lowest close.
Okay, so we have highest high, lowest low, highest close, lowest close.
Correct.
Okay, got it.
Exactly.
Okay.
So what this shows, and this coincides with the high and low close by weekday report on Edgeful, and what it just kind of gives you an understanding of, okay, where are we relative to last week, or even the previous week's range, which is another great one too. Sorry, my dog might start to. There he is.
Mine's sitting on my lap. Don't worry about it.
Yeah. So, so the way that you like to look at this is to say, okay, like let's say Fridays tend to be the highest high of the week.
Mm-hmm.
Now you can take a trade, and now seeing that directly in your trading view says, okay, now I can target this area or however else. We just wanted to capture the entire report like within Edgeful in a way that people can actually use to say like, okay, this is my area that I'm targeting, or maybe we're at the high of the week right now, but it's a Wednesday, therefore I should target even more continuation to the upside if Friday is usually the high. Does that make sense?
That's a good point. Yeah, that's a
Yeah.
really good point. Okay.
We can
That
even
is
cover a
interesting.
couple of the other ones too, or you can go to the previous week's range report.
Okay. So is there anything here that is giving us so I'm assuming like right now, this is weekday, 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 correct?
That is week.
No. So even on a 15-minute chart, this is a week?
Yeah, so you can, if you scroll over, you can see
Oh
right
wow.
now you have regular trading hours on. You don't have the extended hours.
Oh, that's okay. Well, I mean, I don't want extended. I just want session hours. That's fine.
Yeah, so you can
Okay.
see once you go to
No,
your
no
look at the bottom, that black box along the x-axis. So now you're on Monday.
Yep.
Now scroll over slowly, and you can see the weekdays change.
Yep, you're right. Okay.
Yeah,
I felt with a 15-minute it wouldn't incorporate that, but yeah, I mean,
yeah,
15
it's not
minute
that many
in a
bars, honestly. It's
yep. Okay.
less than you think, actually. But yeah, it looks small, but that is a week.
Sure. So it makes it here's what I'm just gleaning from this information. I mean, I see that right now we're well below kind of the average weekly price action. I mean, you look at, a sell week has been pretty volatile. That one's pretty large. That one's decent. That one's decent. We're about half of that right now. So if we're looking at, tomorrow is Wednesday. If we have another up day Wednesday, I would say like any dips, Wednesday, Thursday, Friday, to see if we can kind of close at the high of the week and also maybe measure the weekly average, which right now I'm always looking at the daily average. I know this is in the ATR indicator as well, but if I did the weekly average here, just to give me a frame of reference, I mean, this would be, we're looking at a $12 move on the SPY. And so
Yeah.
far this week, now, I don't know how you look at this, Andre, but for me, since we had a Friday close lower, or I'm sorry, a Friday close here and then a Monday gap open, I tend to calculate two things. One is I know the week technically starts right here, and I look up $12 or 12 points. So this would be where I would expect right in here, $12.
Yeah,
There's close enough. That's about where I would say if we hit the average move, that should be where this week's high is roughly going to form.
that's
Um,
correct.
yeah, so that would be my $12 move. Now, I also look at it from that's what's based on Monday's starting point, but I
Yes.
also look at this close on Friday and do the same thing just to be on the
Very
safe side.
important that you're saying that.
Yeah, okay.
Very important that you're saying that because actually that's the way that the ATR is calculated. It considers the close.
Yeah, I would too, because that makes more sense to me. Because realistically, I mean, I think what makes it so tricky to trade indexes or you know, I mean, options trading indexes. I mean, the zero DTE stuff. What can make it so tricky is you will get a $12 move on average, but you might only have like one or two up days through the entire week because the
Yeah.
rest is all gaps. The rest is, pre-market, post-market, gap up $2, $3, and then it pushes another couple of dollars. And
Yeah.
you're like, man, what happened to my $5 or $6 day? You might not see it. And that's why I'm so selective when it comes to zero DTE trading. And so
Yeah.
this to me is where I would say reasonably we could have the market pulling back and finding some highs for the week at five. I mean, what's interesting, this is crazy, man. If we did it this week, we'd get back to the highs prior
Yeah.
to the CPI data, next week, which would be really interesting timing, actually.
Yeah. And it actually is very important to consider that close.
Yeah. Okay.
Something that a lot of people don't think about are those gaps. They say, well, today is a green candle, therefore it's a green day. But
Right.
actually, it's not the case because you always need to consider. So, the example that I always like to give is with Nvidia because it has such crazy moves.
Mm-hmm.
That let's say Nvidia closes at 100. I mean, I don't even have a. I'm talking hypothetical here, but
Oh, okay.
Nvidia
Okay.
knows it to be this crazy
Yeah.
stuff. So, Nvidia closes at 100, gaps up to 150 overnight.
Right.
Huge gap up, right? Opens at 150,
Right.
but then closes at 130.
Right.
That's a red candle
Yep.
because the close is lower than the open, but
Yep.
it's still a green day because it's higher than the previous day's closing price. So
Correct.
at the end of the day, you should always look from one close to the next because that actually shows true performance, not or candle color or anything like that. Because let's say you actually had bought Nvidia and just to even let's take out all of the sessions and open and close. If you bought Nvidia at $100
Mm-hmm.
and it went up the following day and it closed at 130, whether it went to 5,000 that same day, if it closed at 130, you have now made $30.
Right.
That's it.
Yep.
So looking at performance and looking from one close to the next is very important when you trade equities or options or anything like that. Futures a little bit different because the sessions are a little more continuous, but
Right.
very important to look at that close over close.
Yeah, no, that makes sense, and that's what I've been doing for the last couple of years, especially with zero DTE getting sprinkled into my strategies.
Yeah.
Is I will take, it's like this is a good example from last week because we had Apple, right? Apple had earnings on Thursday. This was your big gap from Wednesday's close to Thursday. So when this happened, I was so angry because I felt like the market's excited about this Apple buyback. The Fed pivoted really aggressively on Wednesday. Now the market thinks there's going to be two rate cuts. And so this move right here was from the close of Wednesday to the open, or I should say the high of Thursday, we had a $7.64 move. And again, if I go back to the daily expectations, we can use this in Edgeful as well.
Yeah.
So my daily expectation would be around $6. So we
Correct.
went up a little bit higher than that $6 average, and you can see that it didn't go that much higher. And so I was looking at, and I didn't get filled on this, dude. I'm so bummed on the SPX. I
Oh,
was looking at a broken wing butterfly to get some credit up here and call my top around like 5150 or 5160 on the SPX. But one thing I notice also is, I know like the applied volatility. The IV rank has been just dwindling big
yeah.
time, and it went from like 40, 50 IV rank on the SPX, NDX, SPY, and Qs to like 17, 18. So the credits I'm getting are trash right now, and I don't like it. And so I'm like, fudge it. I'm if I can't get like 50 cents to a dollar on these indexes for a
Yeah.
5 and 10 point wide spread, there's no way that I'm going to take the trade. So
Yeah, especially
anyway,
for a 10-point wide spread. That's
dude, ridiculous. And
yeah.
I just got burned on a butterfly today. I did a broken wing butterfly. Expiration was today on the NDX, and it happened to be a 25 and a 50 point wide. So I got burned on it because it went through my pin price at 18,000. The open interest was high. The volume was right there, but as it just drifted through today, got up to like 18,150. I'm like, I mean, it's, at this point, I can't repair it. The best thing I could have done was hedge it with a, in the money bull put spread, and I didn't. So I ended up taking about it was like an $11 loss, $1,100 loss today.
Yeah.
But I mean, on average, I make like, $1 to $2 on NDX, and I'm like 19 for 21 in trades. And so,
Yeah.
I mean, it's fine, but it bothers me that you take off about, 7 or 8 good trades with one max loss, and that does sting a little bit.
Yeah.
I'm not gonna
No,
lie.
for
So,
sure, especially with those zero DTEs, and it's important. I mean,
yep,
if you want to go to on Edgeful, if you want to go to
yeah,
the volume report type, there's something that I just feel the data is so strong on this. If you go to the 1 year,
okay,
that trailing 1 year. So
yep,
what I'll do here is I'm going to explain this report and how to use it. And what it is, it's the average volume and range by weekday. So you can see, can I draw on here? No, whatever. It's fine.
what do you want me to draw?
No, I was just going to, it doesn't matter.
Okay,
So the blue bars are the average volume by
yep,
weekday. That
yep,
white line, or that horizontal white line, is the average range.
right. Price
So
price range,
yeah,
right? Yeah,
correct.
yeah,
Yeah. So the right axis is for the white line, the left axis is for the blue bars.
right.
So there's a very clear uptrend here in volume and range as you go throughout the week. The Monday, yeah,
So Wednesday, Thursday, Friday, it's not a shock that we're going higher in volume and also getting higher, especially Wednesday to Thursday. Wednesday to Thursday, I mean, that's probably the best time to be looking for a directional play, in my opinion, because Friday can be, it's interesting that you pointed out, Andre, the high of the week a lot of times happens on Friday. But a lot of times that high of the week could also be a rejection, right? Like we hit
yes,
the high of the week and then it fades
for
for the
sure,
remainder of the
for
day,
sure.
which is why you'd see maybe, I mean, Friday is an elevated trading range day as far as, 4 to 450 a day. But if you get like a Wednesday, Thursday directional play, that's probably your best bet for the market to actually make a move
Yeah,
one way or the other. Yeah, that's interesting.
exactly. And with this report, you see that Monday has the lowest volume and the lowest range.
Yep.
So in terms of price action, that means highest likelihood to have choppy price action, a
Yep.
lot of fake outs, not a lot of continuation.
Yep.
Low range means literally the least amount of meat on the bone, which means the least amount of opportunity.
Mm-hmm.
So trading, shorter expiration, 0 DTEs, 1 DTE,
Yep.
you better be right immediately and like quickly.
Yeah.
So
Or just sell options and collect it all day.
exactly.
Yeah.
So that's personally what I do. I know that you know that, but I do
Yeah.
the same thing. Sell vertical credit spreads all day on Mondays.
Yep.
But as you go later into the week, volume increases,
Mm-hmm.
range increases, which means more continuation, a lot cleaner price action, like larger moves,
Yep.
and range being the largest later into that week literally means more opportunity.
Yeah.
So Mondays are days where you bat for singles or you bat for doubles. There's not really that much opportunity there.
Mm-hmm.
Being on the long side of options. Later in the week is the day where you can have those home run trades.
I like it.
On the long side of options, if you're not selling options, going for home runs on Mondays is a recipe for disaster.
Yep.
Because you're going to be forcing trades in an environment that doesn't provide home runs.
Yep.
Later in the week are the days where you really want to focus. In trading, you want to make money, but you also need to keep it. So
Yeah.
a lot of
I
people,
like that window right there.
yeah,
If you're
exactly.
directional, Wednesday, Thursday, Friday, get good price action. One thing I would ask too, do you guys have or could you provide some gamma levels on some of these indexes?
We have gotten a lot of requests about this.
Okay.
We are going to be including the options data.
Okay.
The important piece for us, as I'm sure that people have noticed, the site, the interface is very simple.
Mm-hmm.
It's very boiled down. We want to make sure that it's intuitive, regardless of your level of experience. Chris, you're obviously very experienced. You're very comfortable with data. There are other people that are not as comfortable. So we need to make sure that the interface, when we introduce
Yeah.
Greeks,
Yep.
is also very user friendly.
Yep.
So that's what we're doing right now is we're trying to figure out how are we going to display this in a way that is very easy for a like beginner intermediate person to be able to digest.
Sure.
Yeah.
Yeah, I just thinking. Also, I do have a question since we're here today and we have 1,234 companies reporting earnings this week. If I could actually have you walk through an earnings report with Edgeful, because I showed you last time we spent 2 hours or whatever on a call.
Yeah.
I walked you through option slam. I walked you through how I price out my options and whether I'm going to go long or short. And I'm looking back the past 10 option reports. I can go back on option slam up to 30. I mean, I can go back 87 reports if I want to on one. Let's use fudge. Let me look at the list here. Where am I? Got a list short. There we go. So let's take a look. How about Roblox? Let's look at Roblox for Thursday morning. Can we do that with Edgeful?
Yes.
Okay.
If you just go to the report type price act. Well, that you can do that. I think you have one extra letter in there, but
RB. Aha, there it is.
yeah.
So Roblox, and
Go
then
to
we're
the
going to.
price action,
Okay.
and then go to that earnings performance. A little higher, a
Yeah,
little
right
higher.
here. There it is. There we
So
go.
what this report does, now you're looking at the trailing 3 years. If you want to switch to the 5, you can.
Yep. Want a lot of data. Okay.
What this report shows you is the average move. We currently have the 3-day button selected. So the average move 3 days before earnings,
Okay.
the day of earnings,
Okay.
and then the 3 days post earnings. So you can switch that from 3 to 5 to 10 to 15, whatever you
Yeah.
want.
Yeah, this is fair. And I do this because my cutoff is typically 10 to 11 days. If I take a trade on a Monday, Tuesday, and I feel like there's not enough juice in the market to maybe manage it by that Friday, then I might go out an extra week and give myself, 10 to 11 days of expiration,
Yeah.
just in case. And that way, like this week, for example, all my earnings expirations are out to the 17th because next week we have CPI and PPI in case it's going to be another mover on top of earnings this week. So
Yeah.
just food for thought. So yeah, I think the 10 days great. And so this is 10 days pre-earnings. Now, when it shows earnings, is that the day of, like
The day,
live trading the day of?
let's assume that the announcement is post market, after market close.
Mm,
That is the day of the announcement. So
gotcha.
usually, I mean, what you'd expect. I mean, I've never looked at Roblox personally, but what you see is it's a consolidated performance
Right.
because people are waiting for the announcement.
Right. Sure. Okay. It's probably an after. I mean, I think it's an aftermarket this week as well. Let me
Yeah,
confirm that here. It
actually not
is actually it's a before market on Thursday.
okay.
Okay.
So in this case, it would
The day of.
it's regardless. That is the day of
Yeah. Okay.
the performance. The day of.
Okay.
So in either case, whether it's before market or after market,
Yep.
it will consider the move. So in this case, it would be considered in the earnings day actually, because we calculate, of course, close over close. So
Hmm.
it would use the previous day's closing price. If it gets announced pre-market, then that would be considered in the performance, and then the price action would move as is.
Okay.
So,
Yep. It does.
and then if you scroll down, you can see the performance for each period. So now we're looking at the previous 5 years. That's 12 dates, which
Right.
you can see just in that initial table on top, the 12
Yep.
dates. And then this is the actual performance pre-earnings, the day of, and then post-earnings as well.
Interesting. An average would be real nice. Just throwing that out there.
Yeah, that's what it is on top.
These are averages.
Yeah,
So 10 days after your average is 3.5%.
correct.
Earnings day, 2%. Day
Correct.
of earnings.
Almost 2%. Yeah, so that's
Okay.
what the average is. The table below is the expanded list of the averages.
Gotcha. So I'm wondering, as kind of an aggregate percentage, are we just adding all this together? Like you have a negative 2 point. I mean, this is a pretty big swing. If you have a negative 2.5 all the way to 4.63, I mean that's essentially like a 7% swing from pre to post. Yes.
So the way that it works is, let's say price. I mean, I'm just gonna talk out loud here. Let's say
Yeah.
price is at $100.
Okay.
Drops 3% pre-earnings, so now it's at 97,
Yep.
and then drops another 2%, which would make it, let's just for round numbers, at 95. I mean,
Yep.
I'm just making it up.
Yep.
95. Then from 95 post earnings, it would increase 5% of 95.
Got it. Okay, that puts you back over So 95 times 0.05. Yep, you're back pretty much where you started.
Yeah.
Okay, gotcha.
So that's the way that we calculate the performance.
Okay, that's fair. Okay, yeah, I was curious because I know we had talked about some of the averages and some of the
Yes,
numbers. So yeah, I just want to get a little breakdown of that.
of
Very
course.
nice. Okay, and that's there. I'm like pretty much capped on some of the earnings. There's so many more companies that are reporting this week, but I will be looking at some of this stuff for IVR. That's what I'm interested in. See if there's anything good with earnings, but um, without like last week was a good earnings week because there was catalyst with FOMC. Next week,
Yeah.
whatever's left, I'm not sure how many companies report earnings for next week, but we can take a look right here. Let's go to
I
the.
would also say to everyone, just be very mindful about IV crush.
Oh
I know,
yeah.
I know that
Well,
everyone that trades options, I imagine that they're aware of it, but you should be very careful with IV crush. Um, I don't
me.
have really a method to find out
Yeah.
yet.
What you're meaning is this, right? So implied volatility during earnings is way higher, and as soon as earnings comes out, it just completely dissolves.
Yeah.
Yeah.
And what that means is even if you're directionally correct, so let's say you buy calls
Yep.
and the IV is very, very high, the implied volatility is very high, which means that the premiums are juiced.
Yep.
And then you're directionally correct so that the following day price opens higher than when you bought it,
Yep.
but the IV gets crushed.
Yep.
Now your position might be down, even though directionally you were correct, because the implied volatility is just demolishing your position.
Yep. That's true. And here's a good example. I mean, I had so I and this is part of the reason that it's tricky with timing, but I did a trade on Disney today. I had a 116 by 115. Essentially, it was a long strangle on Disney, but then I sold. Let me look at my trade report here. I'm pretty sure if we go to Disney, so I did the 115 by 101. So I basically bracketed by about $14. The expected move was supposed to be about $9 or $10,
Yeah.
which we had exactly that. We were sitting here at 116. We dropped all the way down to 108 and flushed down for the day. That was a $10 to $11 move on the day from yesterday's close, which is
Yeah.
right as I calculated. Now, what's interesting, just like you're saying with the IV crush, I was directionally right, but because my value changed of my 101, it's now preserving some of that sell value because now the deltas have shifted so aggressively, and also the IV crush now that the earnings are out. My trade was only showing about $9.50 to $10 profit, and from the 115 to 105, it's pretty much showing real value. So I wasn't getting any extra juice or the extrinsic value. Does that make sense, everybody? Like, so point is, the trade was I took it for 650. It was showing about 950 to $10 today. To me, that's a great trade. But ideally, if it went down to like 102 or 101, I wanted that to be my max profit. But we had pretty much an as expected earnings play today.
Yeah.
But
Yeah.
if you have too much time in some of these earnings plays, you'll get crushed where it takes you pretty much all the way to expiration just to get your full profit. I've had that happen on debit spreads in the past, where especially like SPY and Qs, I've had debit spreads that I am already $3, $4, $5 in the money, intrinsic value, and it shows like 50% of that. So that's it really bothers me where I'm very picky on how I trade that stuff.
Yeah.
So
That's something to be very mindful about.
yep,
I don't know. I mean, I'm not sure how technical the audience is, but I very, very important for options traders
yep,
to just learn, even at a very high level, about implied volatility because it is extremely important if you are swinging into earnings or other like major events that have an uncertain outcomes where the volatility literally will increase before that announcement, and then volatility is no longer sounds tricky for sure. That's funny.
yep.
Sean said in the chat.
Yeah, it is, and that's why the trick with options too is, I mean, I was like I said a little burned today on the NDX trade just because I don't lose very often, and I was like, man, a full loss on a broken wing butterfly that stings a little bit, especially on an index that was 25 and 50 points wide.
Yeah,
But the most important thing is you just keep trading, right? Like I take
of
so
course.
many trades and I'm so active and my win percentage is high that I just keep trading. I mean, if I wanted to, I could wash that loss with one position and be like, that never happened. But it's like, I still want to manage all my trades individually. I take them as is, but it's like, I'm always in that, 0.25, 0.5, 1% risk area for a lot of my trades. And it's about sample size. It's about trading frequently, trading often, protecting profits, managing risk. Like, it's what everybody in this room knows that's what trading is all about.
Yeah.
But even today, I'm just like, son of a gun, like how can I make $1,000 right now? Like I want to make $1,000 tomorrow just to make up for this trade for my
Yeah.
clients. And I'm like, that's stupid. And like I said, I'm seeing that the IV is so low in the indexes. I mean, Andre, I looked out. I'm going to talk about this tomorrow in my trading room. I was actually looking out on the SPX for the rest of the year, and I'm like, you know what, market? If you want to melt up for the next freaking 6 months and go all the way up to, I mean, I'm looking at where could this thing go? So I use my Tasty platform here. They do a
Yeah.
pretty good job with their implied volatility and the expected move. If you go out to December, the end of the year, which you have, this is a fancy options thing called Vanna Charms, and all it is where you have all these leaps and expirations where people that buy calls in January or buy them the previous year's December, they're way out there, either out of the money that they're dirt cheap, or they're at the money when the year starts and they're just trying to let this thing appreciate over time. But I went out to the end of the year and I said, you know what? How big of a move is this expecting to go up? So SPX right now, based on this, this is again just IVX 17. It's a 14.3 year IV percentage around 70%. They're still looking at about another 490 point move. Now,
Yeah.
obviously, there could be a lot of chop in there, and we can have no movement. But based on these calculations, this is still a very achievable level, because if I were to sell a 30 delta call, that can absolutely be breached, right? Like Tasty's platform and their go-to strategy is to do like the 15, 16 delta, anything naked. If you want to do a strangle, you want to do a covered call, it's like usually that 15 to 25 delta, and those get breached every now and then, especially with the directional play. So my point is, if I did this on like so it's essentially a 70 delta on the bull put side, but if I did this trade right here for December, it's a 25 point spread, and I can collect 1610 for it, which means I make $1,600 for risk of 890. And all I have, and this is what I was thinking. It was, and I didn't take the trade, but I'm like, I'm tempted, because that's a 2-to-1. If I'm right and we exceed this 5650 by the end of the year, or we get, let's say we get halfway there. If we get halfway there in a short amount of time, this is going to pay probably $4, $5, $6 of credit instead of
Yeah.
me waiting all the way to the end.
Yeah.
So anyway, point is, it's like there's a lot of ways to trade it. I just think that I looked at this and I was surprised, like, holy crap, this expected move is only like a 30 delta on the call side. I mean, I might take an in the money credit spread, and that's roughly, I mean, that's not a bad risk reward. That's a 2-to-1, and
Yeah.
and that means it's very deep in the money. But I might do this. I might do January, and I might do this and spread out like just a bunch of these like deep in the money calls or deep in the money bull put spreads, and see, okay, I'll risk, $1,800, but if I win, I'll make, maybe I can match that with reward, or I can go into, if it pays me, $1,000 or $1,500, I'll just take the profit and get out of the
Yeah.
trade and not have to
Yeah.
wait. So whatever, man. I guess I was bored today because that's what I was biding the time with.
And that I mean, it's so important. The reason that we don't have buy and sell signals in Edgeful is because you can do stuff like this, and you can look at like way far out expirations and take the data and use it for something like that, or you can take the data and use it for scalping intraday today
Right.
and understanding, okay, this is how things move, and we don't want to tell you how to use the data.
Yep.
The one more thing that I would love to show you, this is something that we just added, is within the reports, within the price action reports, if you just click on the report drop down.
Which one was it? Sorry.
Right there, you're in the price action.
Yep.
Just leave it in price action.
Okay.
And then go to scroll the previous day's range.
Oh yeah,
And then
I
switch
love
to
this
a
one.
SPY or something else.
Yep.
If
So
you want to
SPY.
switch to, yeah, just a SPY is fine.
Okay.
So even in the last 5 years, I was going to say go to the 1 year.
Okay.
But even in the last 5 years, and now, yeah,
We'll go 5 years. We'll just keep it on 5. That's fine.
Yeah, that's fine. For every time price has broken the high, broken the previous day's high, it has closed green that day 77% of the time.
Yep.
For every time price has broken the previous day's low, which is the column to the right, 77% of the time in the last 5 years, prices closed red 77% of the time.
Yep.
So looking at, and now option selling, this is like the dream.
Yep.
Because as soon as we break that previous day's high, even to a wick, now 77% of the time, and now we're going to the daily, so you can remove the previous week's range.
This
Yeah,
guy.
that one. Yeah, you can remove that indicator or just
Yeah.
hide it. Whatever.
I want to do this one here. Yeah. So I'm going to hide this one, turn this one on, and this is the one that I love. I've been looking at this ever since we talked last time, Andre. I've been looking at this every day.
Good. I'm
Yep.
very happy about that.
Yep.
But if as soon as you break the previous day's high, so all you have to do is mark out yesterday's high.
Okay.
And then as soon as you break it, now you have a 77% chance that today we're going to close green.
Yep. So right here. What he's saying is, so today's high right here on the SPY, if we get above that 77% of the time, we're closing green on the day. So
Correct.
as an option seller, that's a good spot to be looking for. If we get above that level, I mean, we're going to start here tomorrow. So if price goes up and breaks that high, you're looking at credit spreads down here. You're looking at a naked put down here. You're looking at a broken wing butterfly down here. Yeah, all those good trades.
Exactly. So
Yep.
Very, very key levels, yesterday's high and low. Very key levels. And this is something that I would have never thought of. And I usually expect like a reversal, I didn't know until I looked at the data.
Mm-hmm.
But looking at that previous day's high and low, you have a very, very strong chance. And now we're looking at the last 5 years too. We're not looking at the last month.
Right.
And you can drop down. I'm not even sure what the data is. Even better.
Yep. So if we close above the day's high, 89%, we just stay above and close green on the day. Break the day's low, the previous day's low, 77% chance. Now I did see week's range. This one's not shown the same. Walk me through this one again. We reviewed this, but the day to me was like really easy. The week was a little bit different.
So switch to the 1 year here.
Okay.
And what this shows, so we actually have the indicator for this too, if you want to just quickly go to that.
Of course.
So then just open up that indicators and then invite only, previous week's range right there.
Boom.
And then just hide the orb one.
Yep. Okay.
And by the way, I see you have the orb set from 9:30 to 10:30.
Yeah.
You can keep it that way, obviously, but we have another indicator that's called the initial balance, which is defaulted to 9:30 to 10:30 because the initial balance is the high and the low of the first hour.
You have it defaulted here, or you have.
So the orb is defaulted to the first 15 minutes.
Yeah. And I changed it to 10:30.
Yeah.
Yeah. Okay.
And then so then if you go back into the indicators, this is just side note here.
Yep.
We have the initial balance. Let me just it's not.
This one's an orb. This is the opening range breakout. This is the one you're talking about.
Yeah, we haven't released it yet.
Okay.
So I can actually just assign it to you very quickly, and then it's not a big deal, and it's totally off topic right now, so maybe I should just do this later, but I'm just going to do it now anyway.
Okay.
So let me just do this extremely quickly. And I'm just going to add you. All right. I just added you to it.
Okay.
You don't need to refresh right now just for the sake of this explanation here,
sure.
But what
previous week's range.
This indicator shows to the left of this thick blue line is the previous week's range.
Gotcha.
To the right of the blue line
is
this current week.
Yep.
So you can see that green line to the top is the last week's high. The red line to the bottom is the last week's low.
Yep.
And clearly we have touched the previous week's high.
Right.
So now if you want to switch back to Edgeful, I'm going to explain how this report works.
Okay. So this is.
That's the division from last week to this week.
So that blue line, though, this shows April 29th.
So that's Monday. So that it's a Monday, and then now you're into Wednesday.
This is so we need. I feel like we need one more bar. Then this is 2 weeks back. This is last week. This is the Apple gap right here. So Thursday, Friday. This is my Friday close.
Hold on.
So this is last week. This is 2 weeks ago, and this is this week. This is current. So I'll put a C for current. So we're missing a blue divider.
Are we?
Yep.
We might be.
Yep.
We are.
Yeah. This is Monday's open right here. So we need another blue divider.
Definitely correct here.
Okay.
I wonder if that's because
is it data points? Do I need to go back to a higher time frame?
I updated on mine.
Say
Can
that
you
again.
refresh the screen? Because mine just had that, and then it just corrected itself.
Okay. Do you want me to refresh?
Yeah, just refreshed because I literally had the same as you, and then it automatically updated. And if you just want to add that other one back, because
Yep.
that I just had the same thing, and now mine updated to this week.
Okay, so we're gonna turn this one off. Let's go
Yep.
into the invite only, and then the opening previous range. Wait, the previous week's range.
Yep. You're on SPY. You're on regular trading hours. Can you switch to extended for a second?
Sure.
Quick way to
Trading.
do that is right on the bottom right. So if you just X out of that, right there, down, 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 RTH to the
Oh,
left.
this guy. There we go.
Yep. Just
And then
switch,
go.
click on RTH,
Oops.
and then
Extended.
click extended. Very weird.
Okay.
Okay. Either way,
Yeah.
so let's just ignore this for a second while
Sure.
we get that fixed.
Real quick, I want to, so quickly for everybody in the room, I did this through Google Meet, and so it's limiting to me an hour because I don't have Google Premium, blah, blah, blah subscription. So I will post another, if we want to keep this conversation going, Andre, if you're wanting to, welcome to. I will just post another meeting link and we'll just swap and go right into another session at 6
We
o'clock.
can, I can just finish this explanation for the report, and we can call it after
Okay,
this.
that's fine. And then, I mean, dude, I'd love to do this again with you and everyone
Yeah.
that's in this with me. Like I said, I'm kind of getting two birds with one stone here with Andre coming in because that's my fault on spacing our meeting. Andre and I are supposed to meet privately, but this is way better in my opinion. But everyone, if you want to stay with me and go for another like 30 to 45 minutes, I'll post another link in my Discord for another session at 6. So let's go ahead and knock this out for the next couple minutes.
All right.
Okay.
So just switch back to Edgeful quickly.
Yep.
And so here to the left side, you can see that we've touched the previous week's high,
Yep.
almost 67% of the time. We have touched the previous week's low just around 30% of the time.
Interesting.
And
That
then
right there is a good spot too, man. It's like just sell at the week's low for another week out.
exactly. And then the
Sheesh.
other thing that I think is very cool is that we've only touched the previous week's high and low
Yeah, very
7%
few.
of the time. So
Yeah.
once we touch one, now you have a very high certainty that we're not going to touch the other.
Wow. And that's okay. I want let's get some additional data here. This is the last year. Let's go 5 and see if these numbers are still that good. That's still pretty good, dude.
Very good.
13% that you touch both, and if you stay inside, that's the lowest is that we're going to stay inside both. But even this, if we touch we mostly touch the high 67%, touch the low 37%. Even just setting up with this bias alone, just set up something at the beginning of the week and just stay out of the way. You've got a 65% probability of that trade.
Yeah.
Take that edge all day, man.
Exactly. That's exactly right.
So good, dude.
Yep.
Cool.
Yeah. I mean, if anyone has any questions, I know we have 3 minutes, but if anyone has any questions, we can.
I'll gather some questions. We'll carry this conversation over. I'll gather some questions, and you and I can send you an email. You and I can chat offline about this. But hey, man, I appreciate the time. Hopefully, this was good and informative, and we're diving through some more. And I'm excited to see. Keep me posted on what you guys need from me as far as the new interface, the new dashboard. Like if you need me to pilot something or prototype it, I'm happy to be a power user.
All right.
Cool.
Okay. Thank you very much. I hope you guys have a great day. Thank you, Chris. We'll do this again soon, hopefully.
All right. Thanks, Andre. Take care, man.
All right. Bye.